All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Yes, the last day of this week, and of course, the last day of this month. Ladies and gentlemen, yes, it has been quite an interesting one. However, an interesting month. However, I would say a little bit on the more on the quiet side in comparison to what we had so far. But again, I keep on saying maybe this is like the calmness before the storm. Look, I think we're going to be stepping into a new month next week, and I think that one is going to be somewhat of a crazy one, and something tells me that it's going to be geopolitics that's going to be the driving force. Now, look, before we go any further, because I wanted to talk in this little video, I wanted to talk about the precious metals and in general the commodity sector, because again, oil is also a big issue, big discussion, and I wanted to share a few thoughts and ideas. And let me know in the comments if you agree or not. But hey, let's go through that first. Before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. So, like I said, yes, this little video is going to be about the commodities and what could we expect, and what are the current technical setups on the charts. Also, before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, I want to kick off with gold. Basically, this is something that I was discussing this morning in my Markets Talk live webinar, which you can, by the way, all the time join for free. It's available. It's every Monday, Wednesday, and Friday. So you can check out the YouTube, our YouTube page. There we go, stalled there a little bit. Look, what I was talking about today, that gold, yes, it looks still attractive. We know that there is still demand, huge demand for gold, given that we have seen and heard that many of the big companies and big funds and also governments are purchasing a lot of gold, a lot of silver, and this is kind of pushing the price a little bit higher. Now, something that I wanted to kind of share with you in a way as well, that look, whenever you see something like this happening, and we had gold already rallying like crazy, and given that we are seeing these reports coming out that for example, China is piling up on gold and silver. We have some other big funds which are piling up on or purchasing a lot of ETFs. Now, my problem here is that we're not really seeing a strong move to the upside like we had. Now, we know that if gold and silver really has demand, it will fly. It will, it will go higher, and period. But lately, although we're seeing this positivity, it's not really flying that much to the upside. Now, look, this is a daily chart, right? And after we had a hit of that 5,600 level, almost 5,600 level, we very quickly sold off. And this is understandable. This is like, a little bit of profit taking. Also, this is a moment where the CME group changed the fees in a way, from a flat fixed fee to a percentage in order to trade contracts of gold and silver. So and this is where, like I said, the big sell-off happens. Again, perfectly aligns with some profit taking, great, and then we see a gradual recovery here. Now, purely from the technical side, this looks more like a bearish indication. So you have ourselves, a big decline, which is a pole, and a bit of a gradual correction back up here, which in a form of a flag. So basically something like a bearish flag overall. This, of course, according to all the TA rules, tends to be a bearish indication. Also, a formation of a possible rising wedge pattern here. Again, something of a bearish indication, it's a bearish pattern. And from the very, very short term perspective, we can see that we lately, I mean, just purely from this week's perspective, on Tuesday we had this decline, a sharp decline, and then we're seeing like a gradual decline here, a gradual correction, sorry, to the upside. So in a way, there is this little pattern which is called kind of the bearish three method. You know, it could be the bullish three method and the bearish three method. Is basically when you have the first candle like this in the bearish three method, you have the first candle to the downside, and then the three consecutive candles and their bodies are within the first candle. Then the fifth candle basically happens to the downside. But again, that's one of the kind of ideal scenarios that happen. So I'm not saying that this is going to be for sure this, but in general, we're trying to evaluate everything, trying to understand, you know, where it could go next. So we're trying to apply all the tools that we have. Now, look, this, of course, like I said, I have three indicators, three patterns, which are in favor of a down move, and also the fourth one, which basically means that, look, the February month here, the February monthly candle here, it failed to reach the all-time high. Normally, we are just okay to, you know, overcome everything. Don't get me wrong. I mean, we might still have a scenario like here, like we had here back in October time. So when we went for a new all-time high, we surpassed that. You know, we hit the 4,000, kind of almost 400 level. The November candle was, you know, it failed to reach the all-time high. And then the December candle just rallied and, you know, pushed further north. So we could see the same thing happening as well. Don't get me wrong, but you know, you're always preparing yourself, right? Because whenever you see something parabolic as this, you kind of start to be a little bit, you know, on the kind of cautious side, because again, what comes up must come down eventually at some point. And you know, if we look into history, then we had similar actions before, back in 1980, 2011. I'll show you silver chart a little bit in a bit, and you'll see this is even from an even more clear perspective. Look, long story short, what I'm saying is that for now, looking at this on the daily chart, I have, like I said, it looks like a little bit more on the bearish side. Now, the what is happening around the world right now, that of course is not really supporting the downside scenario. In a way, we know that gold is the you know, the go-to tool for, you know, for being a safe haven when the times go rough. I mean, is the best safe haven asset. However, I said it before and I'll say it again, and I'll stick to my words, that whenever times go rough, if we have, let's say, you know, prices are like these, elevated like these on gold and silver, and we know that there are a bunch of governments that hold huge deposits of these precious metals, why not to sell what you have, a little bit of what you have, at the, you know, higher prices, if you know that the market, let's say, potentially could reverse lower, and that could start harming your economy. So instead of switching on the printing machine, you can have, you know, money income from here. But again, that's a simplistic way of thinking, probably. For now, I think that anything can happen, of course. Like I said, whatever comes up must come down at some point. But look, this is just an idea, okay? This is something for you know, everybody to kind of think through. Again, let me know in the comments if you agree or not, or maybe I'm missing something, you know. But yeah, certainly looking at just purely from the technical side, and just in general history, yeah, it's there should be a moment when it's going to reverse again. We don't know when, but if this is the moment, if it's failing to reach the all-time high, is this going to be the moment when, let's say, going into next month, we'll see a little bit of a reversal back down or not? So keep that in mind. This is where I'm going to lean into silver a little bit, because silver also, look at this. I mean, it's a strong parabolic move that we saw back in January. I mean, it just exploded heavily to the upside here. 121 it reached, and now it's barely it's struggling to even go above the $90 mark. Now this is again like a very very interesting moment here. So we had big shots, moves to the upside back in the past here, 1980. Look at this. Nobody, it was also a very parabolic move, and people were probably thinking, you know what, is gonna just gonna go up up and that's it. But then it reverses back down. 2011, the same story. We rally significantly, but then it reverses, back down to again. So yeah, like I said, I think that we have established a new all-time high. And if we want to see this one going further north, I think, in my opinion, we need to wait for a clearance of the current all-time high and then kind of we can do something about it. But for now, it's like I said, I'm just aiming for the 50% retracement at the moment on the Fibonacci here. My Fibonacci is drawn from the highest point of, well, in general, the all-time high to the current lowest point of this year. And the Fibonacci, the 50%, is roughly around the 92.87 zone-ish, something like that. And this is, like I said, this is where the 50% retracement is. So I'm aiming for this level first. If we clear it, okay, I'll go higher. But at this point, again, I'm being a little bit on the careful side. And in my opinion, that gold might stall here a little bit if we, like I said, if we do accept the fact that we could see lower levels. So gold might stall here a little bit. Silver could still push a little bit higher. And this goes in line with another theory that I have here, is when I'm looking at the gold and silver ratio, so basically how many times gold is more expensive than silver. And at the moment we're seeing a decline. And I think that there is a chance of a further move south here on this chart. And that means that, yes, it kind of aligns perfectly with gold, for example, sticking around the same level, silver still pushing towards that 50%. So then we could see this ratio actually falling a little bit lower. Now, another few commodities, precious metals I want to pick up on, and that's platinum. Platinum is very interesting, and I want to jump into a monthly chart actually. Let me just clear up these lines because these are no longer needed. But on the monthly side, look at this. I talked about this in my Markets Talk webinar, which you can, like I said, join every Monday, Wednesday, Friday. I am watching this barrier right here, the 2,000 kind of 300-ish zone, or to be a little bit more precise here, 2,299, which is the highest point of 2008, ladies and gentlemen. This is from where, the financial crisis, when the financial crisis hit, look at the drop. So this is a good example actually, because it's another precious metal, and this is a good example that when markets go into turmoil, again, precious metals also fall. So you have this moment, where the governments do start liquidating on some of their reserves just because they know that they need some money quickly to support their economies, to support people. And, this is a very good source. So whenever you see these big reports right now coming through where governments are piling up on stocks of silver and gold, and, big companies, big funds are purchasing ETFs, this makes me wonder that, is it just a reason so that everybody would see that and everybody would start jumping in as well, raising the price as much as they can, and then basically, you liquidate your positions quickly, and while people are just, trying to understand what's happening and everything. So that's what I'm saying. This is maybe what happened in 2008 as well. And look, I'm watching this hurdle, okay, 2,299. We have surpassed that hurdle 2 times now. And look how strongly we have surpassed and how quickly we failed, and how quickly we actually drifted lower and failed to stay above this hurdle at the end of every month, at the end of December and January. Despite the January's big shot here to the upside, look at this. It just quickly drove back down. So my question is, what's going to happen now in February? Are we today going to see, this one staying above the 2,299, or actually are we going to see, are we going to see a drop back below this hurdle? But again, it's an interesting one. We're again seeing the same problem here, failing to reach these not only the current all-time high, but also the December's highest point. So that's my worry here a little bit. Palladium also, looking at this picture, look, I like palladium in general, right? It's a good, interesting metal, but I think maybe it is running out of steam a little bit. So we're currently resting on the at near the 38.2% here on the Fibonacci retracement, drawn from the highest point of 2022 to the lowest point of 2024. So yes, this is an interesting area. If it holds, I think that maybe a drift back down could be possible here. Now, very quickly on oil, WTI oil, because again, this is a heated topic right now due to the we know what, we due to the potential invasion of Iran. And this morning, I took a picture here, a snapshot here, that this is what's happening right now. These are the triangles here of the ships, the U.S. naval deployments. So they're coming through right now towards the Gulf of Oman, getting closer to the Strait of Hormuz here. Now, my issue here with oil is that yes, it's pushing higher on these threats. Look at WTI oil, look at Brent. There's more upside here, potential upside to come. At least it seemed like that. And Brent, for example, is getting closer to my other big resistance area, which is this downside line taken from the highest point of April of 2024. But I want you to be a little bit more on the careful side with further upside. Why? Because look, in general, this conflict can actually get out of hand very quickly. And yes, on one hand, you have the U.S. military, which is really trying to, police the whole world here. U.S. government, which is trying to police the whole world and, implement their own kind of ideology. But what's interesting here is that oil is pushing higher. Yes, that's understandable because there are threats. However, if they suddenly come out and say that, you know what, we're not gonna, because the deployment of the ships was enough to scare Iran. That's why they're making a deal, and we're not gonna invade, that country. So this is going to be a big moment for oil for a major reversal. In general, I am still bearish on oil because I don't believe that this current administration, U.S. administration, needs higher oil prices. Why? Because first of all, on one hand, you're trying to bring businesses into your country. You're telling everybody to come and build factories inside the country. For that, you need cheaper oil as well. That would be great. And another thing is your adversaries, whose economies depend a lot on exporting oil, and because they like the higher oil prices, you're kind of giving them a helping hand here as well. So it's a little bit, like I said, it goes a little bit off here. Anyway, long story short, that's why I don't believe, like I said, in higher oil prices. I might be wrong, don't get me wrong, I might be wrong, but for now, I'm going to stick to this idea. Maybe I'll have to change it, and if I'm going to be wrong, I'll be the first one to say that I'm wrong. But for now, like I said, I'm sticking to this idea. I think that maybe they will do something, they will attack Iran, maybe again. It will be just like a simple shooting a few points in on land and just kind of claiming victory this way, like they did last year as well. So maybe it's going to be one of those. However, if Iran decides to, enough is enough, we will respond because you keep on, bullying us, then that's where, of course, oil could fly further north. Let's see if that's going to happen or not. And very quickly on natural gas, just to finish this one off. Look, I mean, we had a major push here to the upside. This was a major speculation moment here. Congratulations for everybody who caught this. So we captured a strong move higher here. This was at the end of January, and then it very quickly sold off because just again, first they come out saying, oh, the weather is going to be very bad. We need more reserves, natural gas reserves. It shoots up higher. Then everybody's like, oh no, the weather is fine now. Like we have enough reserves. boom, like so great, amazing. And now we're seeing a little bit of a decline here, a gradual decline, and this is one of my favorite examples of patterns where we see a strong decline downwards and then a gradual decline downwards. Then the next step is kind of tends to be to the upside. And also looking at this little picture, it looks like a falling wedge, so it looks like a falling wedge is tends to be a bullish indication. So keep your eyes on this. Like I said, we have fallen below $3 here on natural gas. If we somehow climb back above the $3 mark, I think that maybe we could even actually see a further push north here. So let's see what's going to happen here. For now, I'm watching this one very carefully. I do like what I'm seeing from the technical side. Let's see if it plays out to the upside at some point. But again, look, don't get me wrong. What we could see as well is a sharp decline very quickly, a sharp decline lower here, a drop. But then let's say if it's just a somewhat of a false breakout, especially on the weekly chart, hey, then then this is where the interesting bit comes in, potentially inviting more bulls into the game. Ladies and gentlemen, I hope you found this useful, and I just wanted to share very quickly with you this little piece on the commodities, on precious metals, and other commodities. There we go, stumbling here a little bit. So, but hopefully you enjoyed it. Thank you very much for watching and listening. Like I said, let me know in the comments if you agree or not, and then we'll go from there. Yeah, as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.